All right, and good morning, good morning, good morning. Welcome to another episode of Money Matters. My name is Nev, and today is Monday, so happy Monday to you. Boy, we had a very eventful weekend, right? Bitcoin was going up, Bitcoin's going sideways, Bitcoin's going down, it's going down, it's going down. How far down is it going to go? Well, nobody knows exactly, but we do have some guides to give us that idea of what's going on. My personal thing when I was looking at it was looking at potentially hitting $29,667 level, plus minus a few $100, right? So that's kind of where we're going to be taking a look at and why that is and how. There's some other reports that I wanted to share with you that come fairly close to my price, and I will be explaining to you exactly the reason why. It actually has to do with Elliott wave. One of the things that we know about Bitcoin is that it's very cyclical in nature, how it goes up, how it goes down. A lot of that stuff is connected to the halving events. And we have some historical, not a long history, right? Like not like gold that has thousands of years or real estate or any of that. But we do have some historical metrics that will give us an idea as to why and how that is. And a lot of it has to do, Bitcoin is following Elliott waves quite nicely. So we're going to be taking a look into those things. We're not going to go into what Elliott waves are. So if you are curious about it, right after the show, I suggest you go and look it up so that you can learn what that is and how it works, and so that you can also predict the price movement. So right now there's many people that are freaking out. Overall, I don't know, freaking out should be a good thing. And of course, we'll see what people are saying, what's going on for everybody's education and benefit. I do want to welcome everybody who is watching this live. If you are here, hey, feel free to say hello. I am watching you. Watching me. All right, just kidding. I'm not really. I mean, I am, but you know, it just sounded kind of fun to say. Anyways, thank you very much for joining me. I hope to give you as much information and knowledge as possible. This is really in regards to just sharing information and news so that you can start thinking well for yourself and for your wealth. If you're watching replay or listening to this on one of the podcasting services, welcome as well. If you're brand new, make sure you subscribe, make sure you hit some sort of notification. Let's do this. Well, for some reason, sound is not coming in for the video, and I didn't test that. I tested everything else, but I didn't test that. So my apologies for that. We're going to stop that one short, and let's just go with the show, y'all. Hopefully my sound comes off correctly. I mean, I'm seeing things moving, so I don't know what happened with the video. So anyways, let's take a look at the market. And of course, we are seeing Bitcoin. Let's refresh it. Let's get the freshest possible for the show. So right now, Bitcoin is sitting at $34,830.61. We did dump 12.3% in 24 hours. And as you can see right over here on the chart, I mean, we did come back down rather sharply. Ethereum is currently trading at $1,103.78, down 15%. And as we scroll down the top 100, you will see that it's predominantly in the red. Market is definitely in the red. We do have a few healthy gainers, and it's Horizon at 67.2% up, and Zcash 27% up. Neo is then 5.7, and then we have empty set dollar Monero in the threes, and then basically it's the stable coins that are pumping, interestingly enough. On the losing end of things, Bitcoin Gold actually dumped the most, 33.7% down in the last 24 hours. EOS, 23.2% down, and a lot of people attribute EOS losing as much money, or you know, in valuation in dollars, as it does, because Dan Larimer has decided to leave the project completely. So they're without a CTO. We'll see. They'll probably get somebody else, and Dan is going to start some other project, play pretend he's doing something, make some money, and move on to something else. I could be wrong, but that seems to be happening, at least thus far. Maker down 22.1, Nano down 21.8, Bitcoin SV 21.1, Balancer 20.9, Litecoin 19.3. I mean, everything is gone down, and of course we are seeing that stuff. The market cap as a whole is slightly below 1 trillion. So we did lose some valuation within the market. But again, this was one of those things that we have expected to see happen. And we are witnessing the long term correction right now that people have been tweeting about, hoping for. So here we go. People are saying, oh my gosh, can we get like another 30% dump? And I will say that I was wrong. I was wrong. I was right on some things, but I was wrong on some things. And what was I wrong on is that I didn't think that we would hit 30 to 40% dump in this bull market because of institutions. So clearly I am very wrong in thinking that. It appears that even with institutions coming in, we will continue to see the big downward moves even in the up cycles. So just something for you to prepare mentally, physically, emotionally, and financially. And it was one of those things that I didn't know how things are going to play out exactly because of institutional investing. And it turns out that, yes, we are actually seeing a dump even with them coming in. But this is really good and it's very healthy. So we had the weekly RSI indicator in the mid 90s, which was showing severely overbought conditions, basically saying this is way too expensive, not quite sustainable. And I think everybody who's been in the market watching any of the shows knew that, hey, you know, when you go and have a parabola that goes straight on up, that's not healthy. It's going to have to come down, and come down it is. The new all-time high of $42,000 achieved in the past week looked to have finally met some heavy resistance, so we started coming back down. We did find some support around the 34,500 area. And, you know, we are sort of keeping around that, but we did hit down into the 33. So we'll see how it's going to go. If it continues to slide again, panic could set in, and we will see a looking to retreat to major support area of 24,000 and even fall to the 21 weekly EMA at around 21,000. From a technical viewpoint, this would be an extremely healthy correction, and I absolutely agree. And actually there's some information that says, you know, this 24 to 21 may be one of the waves, but there's also another way to look into it, and we're going to get into it in just a moment. But before we go there, there's some information that is coming out of Europe. So there's some definite panic on the European banking side. HSBC has actually basically prevented any crypto transactions. So Sunday Times said that HSBC is blocking transactions to and from cryptocurrency exchanges, along with some other banks in the UK, who have all taken steps to prevent their customers from purchasing cryptocurrencies using their credit and debit cards. CNBC host and on-chain capital founder Rand Neuner, if bank go down the road, customers will make the choice to bank elsewhere when restrictions will be imposed on what they can do with their own assets. So he actually tweeted about the whole thing. And he's saying many banks will put themselves out of the business doing business like this. And, you know, it's one of those things that it's one thing to, you know, prevent your child of what they're going to do, but it's my money, right? And so whether I decide to buy a car, to buy a house, to buy Bitcoin, to buy, you know, Tesla stock, or whatever the heck I want to do, it's my business, right? It's my business, it's my money. I should be able to do that as an adult. Now, I do think that putting out like educational materials and helping people learn, that's really, really helpful. But doing something like this is absolutely ridiculous. Of course, we did have Jason Yanowitz from Block wrote the group, tweeted, HSBC is now blocking transfers to and from crypto exchanges. Legacy financial institutions will do everything in their power to stop this movement. They're literally denying their customers access to the greatest performing asset of the past decade. So we'll see how it's all going to play out. One of the things that HSBC and their other banks, while HSBC didn't say specifically why now and why this, they have been, and banks have been, and HSBC is one of the banks that has been doing that stuff, basically actually claiming that it has to do with regarding illicit activities like money laundering and, you know, the risky assets and so on. But ironically enough, if you will recall, if you watched this show or read any of the papers, not only a few months ago, we did have a report with HSBC actually being one of the banks that was involved in a global money laundering scandal that was pasted out from FinCEN. So it's kind of interesting that they're coming in and saying, oh, you can't get into crypto because, you know, it's illicit activities. But then, you know, they are very much involved in illicit activities. So it's okay for you, not okay for me. And the craziest part is, I don't know that Bitcoin is being used for illicit activities. I mean, sure, some of the hackers and that kind of stuff, they were like, pay us in Bitcoin, which is idiotic. Because the damn thing can be tracked. They'd be better off requesting $100 unmarked bills and have a better luck escaping than requesting crypto. But clearly they don't know. Okay, so we also have another one that has been putting in, and FCA, also from UK, is coming in and saying, hey, you know, you got to be very careful of the crypto assets. You're going to lose all of your money. Don't put money in it. And of course, people are tweeting about it. So there we go. One individual has tweeted, here are the bullet points from FCA announcement this morning. I don't see anything groundbreaking here. What am I missing? So top 5 reasons to be worried about crypto assets: consumer protection. Some investment advertising high returns based on crypto assets may not be subject to regulation beyond anti-money laundering requirements. Okay, I mean, I think it's important for folks to know that, but you know, as long as they're advertising accurate of what has happened and people understand that past historical performance does not equal future, it's fine. Price volatility. Hey, there's significant price volatility in crypto assets. Of course there is. Of course there is, as there is in stocks, as there is in any risky asset out there. Product complexity. The complexity of some products and services relating to crypto assets can make it hard for consumers to understand the risk. Yeah, how the heck do you analyze a stock that has been propped by the government and the central banks, and what is the valuation in there? And who the hey knows what's going to happen, and are the products good or not? So again, you can, it's a very complex product and very complex financial system. They don't talk about that, but they do attack onto the crypto. Charges and fees. Consumers should consider the impact of fees and charges on their investment, which may be more than those for regular investment products. Perhaps, perhaps not. Sometimes you don't pay a fee, like trading on Robinhood. You don't pay a fee per se to put in a trade, but I assure you, you are paying a fee when you actually get into and out of those trades with higher and lower markups. So you definitely are paying for it. And finally, marketing materials. Firms may overstate the returns of products or understate the risks involved. Well, yeah, some firms might absolutely do that, and that's absolutely true. However, that is one of those things that it has more to do with the company, and I think a lot of the companies in the financial markets do that. I mean, you know, mutual funds are known for doing that stuff, right? They're definitely known for doing that stuff, and they give you like, but look, like we lost money last year, and we lost money in the last 3 years, and we lost money in the last 5 years. But hey, look at the performance over the last 20 years. We did make money. Well, of course you made money. Hopefully you made money in the 20-year period. So, you know, it's one of those things that, again, you know, it's you know, it's bollocks. Let's just call it what it is, okay? Let me use a British word for that one to describe that, what's going on. So let's get into some more interesting and exciting news. And one of the interesting news is that we do have 2 bars that are up for sale, and they're selling exclusively in crypto. They're saying, hey, we'll accept either 800 Ethereum tokens or 25 Bitcoins for both bars, and you must buy both. So the owner of the bar is basically saying, hey, we are in New York City, we're looking to sell, and I will sell for crypto. So they put in a big old signs, they're tweeting, they're going out there and doing all kinds of interesting things, and I think that that's pretty nifty. So hopefully we'll see if anybody's going to buy it, but if they do in today's prices, that could be a really good deal. And then, you know, 10 years from now, it could be like the most expensive pizza ever bought that everybody talks about right now. All right. Time to talk about what the hey is going on with Bitcoin and where to expect, where are we going. So we're going to take a look at all of these different things and how people are profiting or losing money. And of course, one of the things is basically saying high or low, Bitcoin still being shaken out of small investors and flowing to millionaire wallets. Data confirms this week. And this was just posted this morning. So what's going on? Well, what we're seeing is that some of the weaker hands, meaning individuals who may not have as much money, individuals who might have bought at the last second or whatnot, are freaking out with this very cyclical component of the bull market that crypto is very known for, especially in the bull markets. And we're seeing that the addresses with more than 1,000 in BTC are continuing to grow, and smaller accounts are actually shrinking, and not necessarily in dollar terms, but in actual Bitcoin holding. So the smaller hands, the weaker hands, the hands that don't have as much money and are much more risk averse are basically selling into this stuff while everybody else is going in and buying. The net effect is thus weak hands selling to strong, and the richer the entity, the stronger the hand. Don't be part of the BTC transfer is coming from Alistair Milne, his warning Twitter users and responding to these findings of what's happening. Now, Guggenheim did tweet, and they did hint at saying, hey, this parabolic rise is unsustainable in the near term, vulnerable to setback. We are looking to sell. And I don't, here's the part that is very interesting. When they say something like this, I think many of the newbies kind of coming in are going, oh my gosh, these guys are selling, let me get out. They sell a little bit, okay? They'll sell a little bit, and then they basically take the profits off the table. They wait for the puppy to go down, and then they jump in. And here is one of the individuals that is known in the markets. You can love him, you can hate him, you can be completely indifferent, but Mad Money's Jim Cramer is talking about what he's actually doing and what makes sense. So here it is, quote, I sold enough Bitcoin yesterday to pay for my initial stake, which is what I would do if it's a stock. I take out my basis and then I let it run. I'm not going to look at Bitcoin again. I'm fine with Bitcoin until it becomes all the way back to where I bought it, and then I will refigure and maybe buy it again. As I tell people, if you have a double, take a lot out. And I doubled, so I took a lot out. It's just no different from a stock that I had double on, with the exception of the fact that this thing, Bitcoin, doubled while I was away, and that's too fast for me. So now I don't have to worry, play with the house's money, see what happens. I'm regarding Bitcoin as a precious stock. And I think that this is a really good way to look into it, and it goes in the same manner that I and many other people out there are talking about on YouTube, Twitter, Patreon, whatever channels you are subscribed to, individuals who have been in the markets, who are investors, who have been investing for a long term. Sometimes you have to take on a speculation and you go in and buy. And then you basically, when you make money, so whether that's Bitcoin or Ethereum or Aave or, RSR or whatever the heck you got in, or it's in the stock market, or it's in the real estate, or it's in whatever it is, when you go in and you buy, you actually put in a set amount of money in it. That's your money at risk in a moment. Then you let that puppy go. And if it goes and it goes against you and you're not quite sure what the long-term trend on it is, then you buy pretty darn quickly and you get on into something else. If it performs the way that it's supposed to, like right now, we are in a bull market for crypto. And of course, it's supposed to go up in a bull market, right? Everybody knows that. You put a little bit of money in, you let that puppy ride. So if you purchased at 20,000, when it hit 40, should have sold a little bit, right? Not everything, but sold a little bit. So even then, if it drops down from 40 down to 35, who cares? Your money is no longer at risk and your returns are infinite. This is one of those things that Robert Kiyosaki, for example, talks about, of how do you get infinite returns. People brag about 5, 10, 20, 30% gains. People in crypto talk about, 100, 200, 10,000% gains, but you can have infinite gains. And that is that when you actually put in a little bit of money, say that you invested in Bitcoin back when it was $1 and you put $1,000 in. Well, when it reached 20,000 in 2017, right? If you had sold $1,000, when it went back down to 3,000, did you lose anything? No, you didn't. Your money is off the table. Your risks are infinite. So even with this sort of pullback, well, A, it's healthy. B, it makes sense. So let's take a look at now and looking at the waves, because I did promise that we're going to be covering that stuff and how it all works out. So here is the report and what's going on. And of course, we have been decreasing significantly for the past couple of days. And there is now talks about which waves are we in. And it's a little bit of one of those things that it's a theory that works out pretty darn well with many of the stocks, especially if they're cyclical, and works really well for Bitcoin. So here we go. The Bitcoin is in wave 5. So there's a primary Bitcoin wave count, then there's an alternative way, and we're going to take a look at both of them. So in the primary version, it basically says that the Bitcoin is in wave 5 of the cycle, and a likely target for the top of the move has been between 40 and 44,000. So that's kind of where they're looking and saying, well, this would also then, if this is true of the wave 5, then this would also complete the cycle wave 3 in the process. Because the way that the Elliott cycles work is that you have large cycles, right, that play out, and the cycles that basically go up, down, up, down, up, and then it comes back down, and it kind of does the same thing on the way down. Now, inside these big Elliott wave cycles, there is small Elliots, okay? So there's Elliott juniors, and the juniors also do the stuff. So let me see if maybe we could do something like this. Let's see if it will work out. Let me see. So this is basically what I'm talking about. So you have Elliott wave goes up and comes back down, it goes up, comes back down, and goes up, and then it does basically the same thing down, comes to the bottom, and then it repeats. Okay, so this would be the big Elliott. Then inside the big Elliott, you also have small Elliots. So you would go up, down, up, down, up, and then kind of, okay, my drawing is horrible, but I think you understand what I'm talking about here, right? So that's kind of what this whole 3 and 5, you were like, you just said 5 and now you're saying 3. Which one is it? It's both. So BTC now is in a bearish cycle wave of 4, and I believe that that's the one we've been waiting for that to actually happen and enter. The 3 most likely targets for the correction following the primary version of the Elliott wave would be $27,481, which would be about 38% Fibonacci, 22,969, which would be about 0.5 Fibonacci retracement, and 18,457 at 0.618. The most likely to act as a bottom would be the 18,457, which is the 0.618 Fibonacci retracement. And what they're saying is that that's the lowest we could go. Now, could it play within the Fibonacci retracements? Yes. Could it hit the EMAs? Yes. So EMAs were basically saying 24 to 21. The Fibonacci is saying 27 to 18.5. So it's anywhere between 27 and 18,000. Now, is it possible that it's never going to go down to any of those levels? Yes, we're going to have to watch and see what happens. But I think we're going to be seeing this happen over the play out over the next few days. Could it be in hours? Maybe, but I think it might be more of a few days. Again, we'll see. I could be grossly wrong. I don't have a crystal ball, y'all. So as I always say. So here is basically what that looks like, right? And I hope you can actually see this. Let me see if I could... let me see if we could do this and maybe you can see it better, right? So right now they're saying that here we go. We are in this primary focus. So this was the wave 1 over here. Hold on just a second. Nope. I thought the sneeze was coming on and I'm like, I gotta mute the mic before I blow your speakers. But no sneeze. We're good to go. Okay, so we had a first wave come in over here that kind of came into the July of 2019 and then came back down for March of 2020. So that was wave 1, wave 2 was completed here in March. Then we entered wave 3 up here, right? Hit the high of the $42,000 plus minus, and now we're basically working on this wave down, which could go down as low as 18,500 level, right? And then from there, we're going to hit the fifth wave, and fifth wave is typically the largest, the most explosive, and that's where we get the most gains. Now, within that small sector, right, we see the mini Elliots, right? So here it is, 1, 2, 3, 4, and then 5 up here, and now it's going to basically come back in fives again until we reach this point of 18,500 as the lowest of the low. So what that basically means is that on the way down, we're actually going to go slightly, we're going to go down, slightly up, down, slightly up, down. So we're going to start hitting lower lows, lower highs until we reach this super low bottom level for the wave 4, and then from there we're going to shoot on up to the 5, and that's the time where we could see Bitcoin starting to hit that 100, 200, 300, 400, 500,000 dollar level. Nobody knows exactly what it's going to hit in this bull cycle, but those are the predictions that we have been seeing, right? So that's kind of what we could expect to see. This decrease would also serve to complete a fourth wave pullback, making this a very likely target to be reached. So again, you can see it right over here in this chart, right? Here we go. This is just slightly zoomed in, right? The July of 2019 was the first high. Then we came back to the low, which was the leg 2, right? In March of 2020. Then we actually hit the leg 3 a couple days ago at that $42,000 level, and now we're coming back down to that, 18 to 20 some thousand, and then boom, we're going to start going back on up to complete this bull cycle. So alternative BTC count. So there's an alternate version of this whole thing, and it suggests that BTC has just completed a wave 3 and begin a wave 4. So the white version of the chart is going to be wave 4, and so we're going to take a look at the chart in just a moment. So 29,667 is 0.382 Fibonacci retracement, and that's the one that when I was doing my analysis individually, well before this article kind of came out, I was doing it, I want to say yesterday at some point, that's the kind of level that I came up with, that we could see a low of about 29.5, right? 29.6. So this is that level right over here before we go on and start a brand new wave on up. But of course, they're saying it could go 25,874 at 0.5 Fibonacci retracement, or $22,081 at 0.618 Fibonacci retracement. Now, the interesting piece with the alternate way to do this count and with the Elliott waves, and we're going to take a look at the chart in just a second, is that this particular component right here, if you look at 0.618 Fibonacci retracement at 22,000, that's much closer to the moving average, to the EMA of that about 24 to 21, right? So this alternate BTC, the reason I went with it is that it comes much closer to also following some of the other metrics that we have within the system when we take a look at the stuff. In this scenario, BTC would be expected to initiate another upward move and reach a higher between 48,858 to 52,937. So this particular one tells us that we would be expecting to kind of go in, reach this new high of about $50,000, then come back down for another retracement, and then go bananas, right? So looking at the alternate, here is the wave to take a look into it. Again, we do have the July of 2019 as the first leg on up. Then we come back down, right? So that's 1, 2 is down in March of 2020. Both agree with that spectrum. Now, this one is basically saying that 3 is in the red mark. It's supposed to actually go to about $50,000 level, right? And then come back down, and then kind of go on up. Again, it just depends on how compressed or not compressed the cycles are. So this is that alternate way of saying this 42,000 that we've just seen, that's not the top of the third big Elliott wave. But we have a small Elliott wave, right? So here we go. The small Elliott wave basically says we start from March of 2020 and we hit on the high basically this summer. Then we came back down low in about September, October. Then we had this big explosive move for wave 3 that we've hit of about 42,000. Now we're going to come back down to about 29 to 22,000, and then we're going to hit on up before we come back down to some lower levels, and then we go into the big wave 3. So a few different ways to monitor. Again, nobody knows exactly which one it is and which one will play out, so just a few different ways for you to actually go in and take a look at what's going on. The most likely target for a bottom is the 0.5 Fibonacci retracement level at 25,874. So that's kind of what this analysis is saying, that most likely scenario is 25 in the short term, and then we're going to go explosive. So again, this particular one right now, it looks like that sit and wait is the time to do right now, is to sit, wait, watch, and learn. Short-term movements, they're basically saying that the movement since January 8 high does look like the beginning of a new bearish impulse, and of course that could be an interesting piece, and you can see it right over here. This is the sort of that highlights that is happening over here, like we hit here and then is it going to go up? Again, nobody knows exactly how this is going to play out. So the only alternative in which the upward move continues is if this is just a minor sub-wave 1 or sub-5 wave. So if that were the case, BTC would go much higher. This would further extend the current rally, which is already overextended, making this possibility very unlikely. So what they're saying is that, is it possible that right now that what we're seeing is that we are in the big 5 wave, right? And that this is just a minor, junior Elliott under the big one that is coming in. However, given the RSI, given the overbought, given the explosive movements, I do agree with this analysis that this is very, very, very unlikely. It's a possibility, but it's a very unlikely possibility. In conclusion, it's you can expect that we're going to be correcting now from from the bullish trend that began in March, and we can see the correction over the next few days, few weeks even. It could be 4 to 6 weeks, maybe longer. Again, my crystal ball is broken. Could we see the giant on dump really quickly? Perhaps, probably unlikely. So this is very exciting because just a few days ago I was talking about good time to enter and stuff. So waiting for this to kind of come back down, give us some of this stuff. Let's complete the wave 4 cycle. This is going to shake off a lot of the weak hands, and it's going to buy us time for the giant parabola that is coming within this bull market. So the correction level targets are anywhere between $18,500 level and 29. I know they're saying 27 over here, but I'm saying 29.6. It's a very big range. I know, I get it, but it does give you something to kind of take a look into and consider. So right now, for me, again, you do you, right? But for me, I really am looking to say, all right, I'm just going to accumulate as much of the fiat and all of that stuff, wait for the pullback, wait for this thing to come between 29 and 18,000 level, and then go bananas and buy more. So again, you do you. That's just kind of what my thinking is at this moment, which could change at any moment. When these things shift, my thinking has to shift alongside with it. So you can't stick to one methodology when the environment around you changes, right? So you kind of have to go with the environment, and this is the environment. So you have to watch what the market is doing in order to anticipate what you should or shouldn't be doing. So just something for you to think about and consider. one of the interesting pieces also is to to think about it differently. If this is all of the waves that we just talked about, the and I'm looking at the big Elliots, not the juniors, big Elliots, the big Elliott wave, all of them are suggesting that that big upward move. All of the analysts, all of the other stuff is suggesting that the $20,000 level is going to be a blip on the screen, just like the $2,000 level was a blip when we hit 20,000, right? So this is all going to be a blip, and this move that we're just seeing right now that looks huge is going to be that small little, like a little bump in the road on up. So even with that, even if you have purchased at 35, 39, 40, 42 even level, hodl, 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 because all of the analysis tells us that long term, not just for the 2021 bull market, but long term, Bitcoin does have a very, very good probability level. It's not a guarantee, but very good probability level that it is going to hit millions per Bitcoin, right? So if you kind of think of it that way and you're like, I'm investing in this puppy for a long term, then your time span changes completely, and all of this becomes noise. It becomes irrelevant. It's sort of like did you go on a casual date or did you get married? Because if you went on a casual date, the date slurping on their soup or chewing too loudly or having a weird, awkward laughter is a deal breaker. You walk away and you don't come back to the same date. However, when you marry somebody, even some of the bigger, flaws that they might have, you learn to live with and you acknowledge as a noise because you see bigger and better things within it. So that's one way that I like to look at that stuff. All right, I do have two more pieces of information, and one might get you shocked. You might get me banned from your watch list ever. So subscribe now, because maybe unsubscribing is a little bit more challenging, because I'm about to say something. Yes, here's a hint. I'm about to say something that might, but before you shut it down and go away, just give me a second. I agree with Peter Schiff on this one, okay? I know. It was hard to say, but I said it. Here we go. I'm out officially. Just came out saying I agree with Peter Schiff. But I only agree on one point of the whole thing. Accepting Bitcoin payments makes no sense. And this is the only thing that I agree on, and I will explain why. It's very different than what he has said. So there was a tweet thing going on the Twitter, right, where an author was basically saying, I'll tell you one thing, I'm never turning down getting paid in Bitcoin again. Elon Musk basically said, me neither. Peter Schiff says that makes no sense. If you want to buy Bitcoin, do so on your own timing, not someone else's. That way you can buy Bitcoin when you think it's a good price to buy, not when someone else decides that it's a good price to sell. There's a good point to this one. Now, if somebody paid me in Bitcoin, yes, I would accept it. Would it be the primary way that I would want to get paid in? Probably not. And my reason for it has nothing to do when it's a good price to buy, sell, blah, 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 blah. It actually has to do with taxation. And here is the reason why. When I go out and I purchase my Bitcoin, at least here in the United States, is regarded as an asset, which means that taxation, as long as I hold it, as long as I don't sell it, as long as I don't trade it, as long as I hold it for more than a year, it's being basically super low taxation of 20% on capital gains, which I know Biden is going to probably change. So that's going to give me even more reason to hodl onto Bitcoin. And then when I have it, I can actually get loans against it, never paying taxation, and still being able to cash out. So anyways, just a crazy thought out there for the guy that follows some of the different ways of thinking. So for me, that's really where the part is. When you get paid, you basically have to pay income taxes on that. And so there's a problem, and Michael Saylor actually does an excellent job explaining this. I'm sure you can find him on a YouTube, and I'm sure you've heard of the guy by now. He's becoming crypto famous. But when you get paid in Bitcoin, you basically get taxed ordinary tax brackets. So the tax brackets that you gain for, like getting that income for your job, job or contracted service or whatever, those are the ones that range, 30, 40, 50, 60, 80%, depending on the country, locale of where you are, how much you're earning, right? So that's the reason why I don't think it's a good idea. I don't have anything against it. Clearly, I'm very bullish on the damn thing. But for me, it has to do with the taxation. Why would I pay 40% taxation on this as an income? Because the IRS, where they're saying like it's an asset if you buy and hold it and that kind of stuff, but if you trade it, then we're going to do the short-term capital gains and losses, and then if you get paid into it, then we tax it as ordinary income. So why would I pay 40% on hard money when I can actually go in, get paid in something like a stable coin, get paid in something like a fiat, and then convert that money on my own into basically hard assets. So the part of the challenge is that you get taxed as ordinary income, and on top of that, now it's creating an accounting nightmare. I have to remember when you actually sent me that Bitcoin. Was it on March 20th? 2020, or was it on January 7th of 2021? So I have to track it of when I did, and at the time when I got paid, how much was it worth in US dollars. Then I have to keep track of all of that, and so now I have to get paid, I have to pay taxes and all of that stuff, versus when I have something more on the stable side, the taxation is much more let's just say friendly to the fiat, because you're being taxed in fiat still. Now, when and if the governments change everything and the world runs on Ethereum, literally speaking, and on Bitcoin and stuff, then that's a different story. And at that time, heck yeah. Now, will I refuse if somebody pays me in it? No, I will not. But I think it is one of the pieces that I wanted to share with you. All right, in a final piece of news before we go for a day, we do have an individual who has shared of their holdings, is a whale of whales that is basically saying of like, all right, what do I have, what do I hold? And so here are some of the largest holdings that the individual has. Again, do you want to follow it? Do you not? But I thought it was interesting, and I thought it might be interesting for folks to say, what are other people hodling, and does it make sense for me to consider looking more into the project? So here we go. Here is a portfolio of one of the whales. So there are over summary of the largest holdings. So interest-bearing ETH, IBETH, Ethereum, of course, Aave interest-bearing USDC, AUSDC, Rent BTC, TUSD, Grain, ESD, empty set dollar, Wrapped Ethereum, Wheat, YFL, YF Link, right? And they're actually doing something interesting with Link right now. So you definitely want to, it's called, I believe, Lend Link or Link Lend, something like that. So take a look into that stuff if you're interested. Bond, DPI, and Sushi. So there you go. That's it for today. I hope that you have learned something. I hope this was really helpful to you. That was my ultimate goal for the day. I look forward to seeing you tomorrow, but only if you subscribe and show up. Until then, stay forever money blessed, and do remember, you are only one.